Inauguration week is upon us. I haven't seen this many good setups in a long time, and we have to talk about it. So in this video, I'm going to be giving you a broader market analysis, and then we'll get into some individual stocks. I'm going to be going over Tesla, Nvidia, AMD, Microstrategy. Volatility is definitely back, as you will see. We had an insane week last week, and I think for the rest of 2025, volatility is going to hopefully play in our favor, and we want to exploit it as much as possible. Let's get right into it. Everything will be in the chapters below if you're watching this on YouTube. So skip to the part that is appropriate for you, for your convenience. I respect your time. Let's go. If you're watching this, I assume that most of you are in tune with this channel. We get a few new viewers every single video, but a lot of you are repeat viewers. Thank you for viewing. Also, you would know that we were waiting for this election gap here on the SPY. We hit the election gap. It's also the bottom of this trend line that started in October of 2023. And you could see that we took liquidity beyond this election gap, bounced off of the trend line in and of itself. And if I pull up the moving averages, something very interesting here, you could see that we bounced off of the 100-day moving averages, yellow line as well. And we are now back above the 50-day moving average, headed towards these equal highs. So as I said, I posted this on X. I said this in my last few videos that I expect the election gap to be taken, and I expect a slow rally towards the inauguration for a green ending January 2025. Now, because of this 5% pullback in the S&P 500, we had some crazy setups on Nvidia, on Tesla. I will get into it, and I will show you my trades and what trades I'm currently looking to take towards the end of the video. And you can see our call specifically set up for that position on Tesla and Nvidia. Just an absolute monster week last week. If you want to trade live with me every single morning, click the link in the description. Come and join us. Now, for the stock market, am I confident that we're going to keep going up past January 2025? And my answer here, as you guys probably know, is no. Why is that? Let's take a look at the yield. The Fed cut rates on September 18th of 2024, and yields have gone up since. This has never happened before. You could see in this article by JP Morgan, it says, this is unusual. In the previous 7 cutting cycles by the Fed going back to the 1980s, the yield on the 10-year treasury was lower 100% of the time 100 days after the first rate cut. And you can see here the 10-year is much higher than where we were after the first rate cut. So we were supposed to go this way, and instead we're going this way. Those of you holding bonds know what I'm talking about here. Now, part of the reason for that is because we've never had such a bloated balance sheet. All of this was printed during the pandemic, and you can see that the Fed's balance sheet went from 3.8 trillion all the way to 9 trillion, and it is finally trailing off, and they're not buying treasuries. So we went from 9 trillion all the way down to 6.8 trillion, giving them credit for not adding assets back to their balance sheet and caving into the pressure so far. But this also means that the liquidity in the treasury market is horrible, which means when liquidity is bad and nobody's buying bonds, bond yields are going to keep going up. But here's the kicker. What happens when Trump gets into the White House? As we know, this is inauguration week. What has happened the last time when Trump was president is he was the first president that I've seen in my lifetime pressure the Fed so directly. Now, I'm sure that presidents always try to undercut the Fed, in backroom deals, backroom conversations, etc. But publicly in the media, Trump was going after Jerome Powell, urging him to cut rates. This was before the pandemic. Jerome Powell caved and actually did cut rates when we didn't need to. So now when rates are at a 30-year high, I can't see a world in which Trump won't try to once again publicly chastise Jerome Powell and get him to cut rates and continue to press him until he does. And this is going to be a situation here in which either the markets will lead the economy or the economy will lead the markets. What do I mean by this? Well, if the Fed is dovish, so they have an FOMC meeting January 29th, which is 9 days after the inauguration. If on that FOMC meeting, the Fed is dovish, already fearing the ire of Donald Trump, then I think the markets will have another blow off top. It will keep going up. So for example, they would either need to cut rates or say that they're going to cut more than twice this year, because that's now the expectation that they only cut twice this year. They would need to say that or actually cut rates as opposed to hold them, which is what is the current probability, is them holding rates on January 29th. And I think the markets will absolutely absolutely rip if that's the case. And I also think with that blow off top, you will see a respite in yields, meaning they could go down in the short term, but that blow off top will likely create inflationary pressures once again, and you will start to see yields crawling back up. And with that 10-year crawling back up and the potential for inflation to go up as well, because you now have easy money, right? If the Fed is dovish, that could put pressure on the economy that we will see unfold later. So it will delay, in my view, inevitable recession. If the Fed is actually hawkish, even in the face of the inauguration, then the markets could see a correction here. The markets losing that much in market cap could then bring down the economy, because the markets and the economy are not exactly untied. Sometimes the markets can bring down the economy because at the end of the day, every single publicly traded company is on the stock market, right? And if those companies are losing a ton of value, then that is going to have an effect on how they spend, how they hire, etc. Either the Fed is dovish and we get another blow off top in the markets, which would then delay the inevitable, or the Fed is hawkish regardless of what Trump says, and the market starts suffering, which will then bring the economy down with it.
Administration probably pressuring the Fed as well.
Yeah.
Right? We will get a blow off top.
Sure.
And it will be volatile, and it will be long vol, right? That will not end well, and it will not be years, by the way. It will be maybe another year. But the picture from a macro perspective is not good, and the market leads the economy. So if we start to get a decline, we will also have a recession in Q3, Q4, which does not look like it now, but it will come on the back of a market decline. And so the question is, what is the Fed going to do? Are they going to be actually accommodative, dovish early, and try and keep the plate spinning and force a real liquidity push into a short, a market that will be able to squeeze the shorts into high valuations? Or are they going to wait, see what happens, and then be too late?
Okay.
And then catch a declining market into stair steps, which again I think will be 30.
But would that be
40%? I'm talking like a 30 to 40% decline by next year if they don't do that.
All right, before we get to the individual stocks, I somewhat agree with Chem Carson there. The short-term path, like what happens in the next year or so, really depends on whether the Fed is hawkish or dovish. We are in agreement that we could see a blow-off top in the event that we get a dovish Fed. And also the market can lead the economy in the event that we get a hawkish Fed and the market starts dropping in the short term. Now, I don't know if I agree with him about the 30 to 40% decline. Certainly, with back-to-back years of plus 20%, it can be warranted. I'm not there yet, but certainly a drop 10 to 20% is what I'm currently looking at, and then we will assess from there. All depends on what the Fed says. Plus, there isn't just one Fed meeting. January 29th is a Fed meeting, but they have Fed meetings all throughout the year: March, May, June, July, September, October, December. All right, so let's get into individual stocks. I first want to talk about Tesla. Why is it that I took that Tesla position? For those of you guys that were trading live with me, I told you about this last week. I did stream on YouTube as well for CPI, so I gave you guys a hint of what I was looking for. And then in the Discord during our live session, I ended up buying calls, and it was because we broke out of this trend line here. You can see this yellow line. This is the previous all-time high. So we broke out of it with an 8% day, which is this candle right here. And I said, if we retest this, it's basically just a classical break and retest, then I will end up buying calls, because here you have the line, which is the previous all-time high. And here you have the line, which is the downtrend from mid-December. This is an intersection here where, we are seeing a retest. So this is a very low risk, high reward play. And we ended up getting rewarded for it really well. Ended up closing my calls on Friday, and I have longer dated calls as well for March. Now, I'm not going to spend too much time on Tesla fundamentals. I've done video after video on it. You could check this video out here. But to me, the fundamentals haven't really changed here. There is something that I will go over when I talk about Nvidia, but the fundamentals here haven't really changed. This is still just a pure momentum play based on the enthusiasm surrounding autonomous autonomous driving, Trump's appointment to the White House, his potential fast tracking of what Elon needs regulation wise in order to get autonomous driving out of the door more quickly without a lot of restrictions, and the fact that we are in the next cycle here. You can see Tesla consolidates, breaks out, consolidates, breaks out, consolidates, and we are on the verge of another breakout here. So my midterm target on Tesla is 638, which puts it at a $2 trillion market cap based on what we can predict in the future as it relates to autonomous driving. Obviously, if you go 50 years into the future, you can predict autonomous driving at, I don't know, 10 trillion, 30 trillion valuation, but there comes a point of diminishing returns when we're talking about projections. The market likes to project what it can, what's ahead of it, right? Even if that projection sometimes seems pretty lofty, it doesn't like to project, oh, what's going to happen in 2050 or what's going to happen in the year 2100. So in my view, a $2 trillion valuation for autonomous driving based on FSD updates, I think that is the next target for the time being. Nvidia, why did I enter that Nvidia short-term play? Well, actually, it was a second play I entered. I ended up stopping out on the first one, but Nvidia basically had these equal highs here at all-time highs, which is at around 153. You see this high here. We drew down on Nvidia, basically another break and retest. This is one of the easiest strategies to swing trade, and I will be doing a whole tutorial on that. But we basically broke out of this level and are retesting it. Now, why is this level significant? Well, if you can draw a horizontal line, then you could see that this was resistance, 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 support, support, support. We broke below it, came back above, support, and now we retested it again. So this level here is extremely important. Plus, if you pull out the volume profile tool, you can see that this level here has a lot of support as well. Now, one of the craziest things I've ever seen on Nvidia, I've actually never seen this before, but if you take a look at Nvidia, it hit an all-time high on the same day that it actually closed at the 50-day moving average. I have never seen that happen on the same day. I found a day when it did that exact same thing. If you look here, November 10th, 2005, you can see that Nvidia gapped up. It opened here, created an all-time high above its previous all-time high, and then came back and tested the 50-day moving average. And that was the bottom on Nvidia for another 6 months, where it topped in May of 06. Now, a couple things to note about Nvidia. I want you to look at its forward-year EPS. If you look at its EPS, currently it's at 2.95. Next year, it's estimated at 4.45. This is what we mean when a company grows into its valuation. Yes, companies can be overvalued, but if you look at their earnings and their earnings continue to increase and their PE continues to decrease, that stock will continue to grow. So if we look at Nvidia now, Nvidia having a 4.45 EPS estimate for 2026 puts its PE ratio, its forward PE ratio at 30. That is basically the stock price divided by its earnings per share. So Nvidia, its estimate at 30 PE, let's look at it historically. Nvidia really hasn't traded at a 30 PE since 2015. But after that, Nvidia comfortably trades in the 50s, 60s, sometimes 80s in terms of PE. It obviously got to a high PE of above 200, but that is a really good sign for Nvidia. Obviously, if we don't get a recession by 2026, but that forward PE right there, to me, makes me confident about my $4 trillion target, which is around $163 on Nvidia. And I will likely hold on to these calls until we at least break these equal highs here on Nvidia. You could see here, I still hold the 135 March 21st calls in my public account. And one other thing that I love about Nvidia is if you look here, its IV percentile is 2%, meaning buying these long dated calls, if you are bullish on Nvidia, is likely better than buying the stock, because if IV increases, then the value of those calls also increase, including the delta rise, right? As the stock price goes up, the delta goes up, but also IV goes up if we get a lot of demand piling into those calls. So in my view, long dated calls on Nvidia are a better play than the shares for the short term. Obviously, if you want to own Nvidia as a company, that's a different story. And let's listen to Jensen talking about autonomous driving here, because this will apply to Tesla as well. And this is why I'm bullish, ultra bullish on these two companies.
Well, in order to train a robot, you need a lot of data. And the first version of consumer robots that we're all going to engage is the self-driving car. And we've been working on self-driving cars now for some time, and the business is some $5 billion estimated run rate this year. And that kind of puts it in perspective. And the reason for that is because in order to build a self-driving car, you need to train a mountain of data, video data. And NVIDIA's data center business is very important to us. And all three computers are big businesses for us. And so if you just imagine, if just right now where the self-driving car business is, if it's already a $5 billion business for us, imagine how big it's going to be when we have 100 million new cars per year, 1 trillion miles driven per year. This is likely going to be one of the largest robotics industries in the world and one of the largest computing industries in the world.
So even if you are not bullish on Tesla, I know that's a very divisive stock where half the people in my audience think I'm too dovish and half the people in my audience think I'm too hawkish. Forget Tesla for now. If you look at Nvidia, I don't know how you can actually argue with the fact that it is growing into its valuation. You might think that Tesla's valuation is a bit lofty because it hasn't proven itself yet. Nvidia not only has proven itself, it continues to prove itself. And if you come over to public and you click on the AI assistant and I say compare Nvidia and AMD financials, it will respond to you and give you this comparison without you having to go dig through the data, making your investment decisions easier. So if you want to sign up for a public account, which is a regulated broker here in the US, click on the link below. But you can see here Nvidia revenue 35 billion, growth of 93%, net income 19 billion, growth of 108%. You get the picture. EBITDA, total assets, cash and equivalents 38 billion, up 110% on its cash. If you compare that with AMD, 6 billion, modest growth. Net income is pretty good, 771, up 157%. EBITDA growth is pretty good as well. Cash and equivalents, 4.5 billion, decreased by 21%. Not a great cash position compared to Nvidia. And obviously when it comes to market cap, they're not even in the same stratosphere. 3.3 trillion versus 197 billion. Although AMD's earnings growth is really impressive. And you can see here, it's comparing scale and growth, profitability, financial health, debt management. Now, both the SPY and QQQ are above the 50-day moving average. Like I said, I expect us to end January green. Now, if Nvidia gets above that 50-day moving average, I think it's headed to those 153 highs pretty easily. So I'm definitely holding on to these calls here. I will abandon those calls if we get below that 129 level. Now, let's talk about AMD here. If you're a fan of this channel, you know that this level here around that 108, really between 105 and 110, this volume pocket here, I'm looking at Nvidia at this level. Now, it doesn't mean that I won't buy calls here. From a chart perspective, Nvidia is a falling knife. And also Nvidia is just making lower highs and lower lows regardless of how strong the market is. So it's going to be very hard for me to buy calls here. I need a break of market structure, at least as 131 level, break and a close, and then on the retest is likely when I would get into calls. Right now, if you bought shares at this range, I wouldn't begrudge you for it. But if we're talking about short-term plays, I'm not looking, in my view, to add a short-term position on AMD. If you look at almost every aspect, Nvidia is actually still very expensive compared to what it produces. Here's Nvidia's PE ratio. We talked about its forward PE. You can see Nvidia is trading at 107 times earnings. If you look at its revenue growth year over year, 153% versus 9.88%. If you look at the CAGR numbers, compound annual growth rate, 67% 3-year versus 17%. Net income 3-year CAGR, 97% versus negative 22%. So, you know, Nvidia does have some highlights here and there. I do think it's a little bit expensive at the moment. I do think that in the short term, this lower highs and lower lows is not great. I want to see a break of structure and a retest. Now, we are below the August 5th low, so we might get that here. We might have taken liquidity below this, but I still want to see a break of that 131 before retesting. Microstrategy, as you know, it is based on Bitcoin stock price, as I talked about before. I told you about this level here filling the gap. It did fill the gap, and we are seeing a bounce here. I did end up selling a lot of puts at this level. And because Bitcoin, after it tested 89,000, has been back above 100, MicroStrategy has as well. But this Bitcoin chart does look a little precarious to me. You can see here that we're coming into this daily fair value gap. On the weekly, we still have some untested levels here. I do think that Bitcoin can come down into the 80s, especially if we see a sell the news effect after the inauguration. So for me, I don't think that this is a playable level right now for MicroStrategy if you weren't in it from the level that I told you about a few weeks ago. I personally would watch Bitcoin like a hawk. If it can retest 75K, man, that would be a gift. But if it can retest this level here between 81 and 88, then I might look at where MicroStrategy is at that time and consider selling more puts on MicroStrategy, because honestly, the cash secure puts on MicroStrategy is free money. But right now, especially with this run up, if you take a look at cash secure puts, they are not paying that well compared to what they paid historically. Plus, MicroStrategy's IV is not as high, and you want high IV when you are selling puts. So even if you look at something that is 30 days out, we were able to sell the 200 puts for almost $500. If you look at the 200 puts now, 30 days out, they're selling for 200. Not bad, but in my view, you can extract a lot more premium from MicroStrategy when we have major Bitcoin pullbacks. Now, since the last time we talked about MicroStrategy in the new year, it did buy another 2,530 Bitcoins. It has a total of 450,000 Bitcoin. As of the time of this recording, current Bitcoin value is 45.5 billion. Now, in terms of its NAV, which is one of the reasons that I told you it was a long before, currently it's trading at 2.14 NAV. What does NAV mean? NAV means net asset value. Let me pull this up here. You can see currently it's trading at 2.14x. NAV is the net asset value. It is basically the value based on its assets. So based on its Bitcoin holdings, how much should MicroStrategy be worth if you just look at its assets? And then how much above that is it trading? So typically MicroStrategy trades at a NAV premium, meaning above 1, and sometimes in the high 2s. As you can see, all of the dot plots here are in the high 2s. Occasionally it crossed the 3 mark, but when it gets below the 2 mark and it is at a major technical level like this, then that is when you want to look at MicroStrategy. So the last time we looked at it, not only was there this gap here, but also MicroStrategy was trading, I don't know, 1.6 NAV, I think. So I think right now there is not a play on MicroStrategy for this week, in my opinion. But yeah, there you have the analysis of the market, as well as Tesla, Nvidia, AMD, MicroStrategy. I don't think we'll see a huge sell the news effect right after the inauguration in the stock market. I don't know about the meme coin. Historically, it's actually been pretty flat during the inauguration and thereafter. But I do think that after that first Fed meeting on January 29th, for the rest of 2025, we'll see an insane amount of volatility. And I'm very excited to keep bringing you these videos to be swing trading with size this year to take advantage of that volatility. If you want to trade live with me every day, I day trade futures live every single day and then take option swings positions as well. I do not day trade options. I swing trade options and I day trade futures. I obviously also buy long-term dated calls as well as stocks. So click the link in the description. Come trade live with me every single day. Get yourself a public account. Link is in the description below as well. Subscribe to the channel. Hit that notification bell. Let me know in the comments below what you think is going to happen to the markets. You disagree with me? Would love to hear from you. Stay safe out there, traders. Peace. Up a cool 2,500 today just from the options that we opened. This is why I'm not even rushing to day trade, honestly. Done. Okay, I took profits on the February 7th Tesla calls. So I have the February 21st. So not as much time decay on those. Yeah, the reasoning is because if I'm looking at this, even if we push up to 430, by the 21st, that'll only be an additional like $30 from where I am today per contract. I'm okay offloading the sooner calls and keeping the longer dated ones. That's perfectly fine.